Hey guys, I'm Nick, and how the heck are you? So the market is crumbling beneath everyone. The Federal Reserve is dropping federal funds interest rates down to 0%. They're also pumping trillions of dollars into the system. But how does that affect you, your money, and your investments? And is there a way to possibly avoid all of this, especially with negative rates? Because that's exactly what we're going over in this video. What do negative rates actually mean, and what does that mean to you specifically? So just like every great investor, we got to start off somewhere with Investopedia. So this is their definition of what negative interest rates are real quick. So negative interest rates occur when borrowers are credited interest rather than paying interest to lenders. And you can see I highlighted down here, in which cash deposits incur a charge for storage at a bank rather than receiving interest income. What? So in human language, what that even means is, like in a savings account, you put money in a bank and you get interest from it, right? Well, recently you have seen that rates have been declining and they're getting closer to zero. Now, this is becoming more possible that negative rates can happen, especially with the president calling for them. Other countries have them as well. Some negative interest rate countries, by the way: Japan, Sweden, the European Central Bank, Denmark, and Switzerland. So sorry, what that means for you is that instead of gaining interest from a bank account, which we normally do, if we do go negative, we actually have to pay the bank to store our money there. So going back to what I was saying before, what? So the thought process behind the government and banks is because they want to stimulate the economy. So this basically pushes people to go out and spend more money instead of saving. But at the same time, that also makes people drain their money from existence. And that's exactly how it could affect you. And that's why this huge drop from, it was like 1 to 1.25%, all the way down to 0%. And this was an emergency rate cut. They were planning on having like a meeting later in the week, but it was so big of a deal, they actually had to do that during the weekend, actually, March 15th. Right now it's March 16th. The market is down like almost 3,000 points. It's crazy, by the way. So the issue for you and me is that if you are a saver, we end up being losers because there is inflation in the world, unfortunately. So as prices go up, if we do believe what the government tells us, it's around or just over 2%. So if prices are going up 2% on average, and you're paying the bank money, you're losing money even faster. And real quick, if you are interested in Dalio, very popular and intelligent hedge fund manager, he just put out an article, the implications of hitting the hard 0% interest rate floor. I saw the article on LinkedIn. I'll leave a link in the description. You should definitely check that out. Now, some people might have also heard that with these negative interest rates that you might be able to get a loan or even a mortgage for negative rates. What does that even mean? Well, I was looking around and I saw this article real quick. It says Danish bank offers mortgages with negative 0.5 interest rates. Here's why that not necessarily is a good thing. So we'll leave this article in the description as well if you want to check that out. But I saw that this negative 0.5% is a 10-year mortgage, by the way. And it could be used as a supplemental loan to help you get a longer mortgage if you wish. Anyhow, so using the idea, if I have a positive interest rate, I pay you interest. If it's a negative, then you're paying me interest. So some people might think the bank is sending you a check every month instead of you sending them. As I was reading around, that doesn't actually happen. What they do is, instead of like sending you a check, so you're technically not being paid every single month that you might think. What the bank may do, if you do get a mortgage, they will pay down the principal for you every single month, that interest rate. So you're technically not getting paid for that, but they are paying down that loan. That's if you actually get a loan like this. So with these emergency rate drops down to 0%, possibly going into negative, they have only done this in past recessions and depressions. So this isn't like a great thing that's happening. There are other things going on which could also cause house prices to get cut in half, maybe a little less. It really depends. No one knows for sure. This is a possibility. Just know that home prices can definitely be affected. Maybe not by half, but they can move. So this gets you thinking, right? So obviously we're all seeing stocks declining like crazy. Well, now if bonds or nothing is paying interest rates, you can't get into bonds. Now, what about savings accounts? Negative interest rates or nothing because of inflation, you're losing money there. If your home's decreasing in value, you can't keep your money there. Well, what else is there to do? So instead of paying a storage fee to keep your money at a bank, another word I like to use instead of storage fee is also theft, but that's just me. You could also go into possible, just an idea that a lot of people are going into, which I will talk about right now, is gold and silver. Buying gold and silver has been a safety play for thousands of years. Everyone knows that they have some value behind them. Unlike your paper dollars that are decreasing in value basically every single day at this point. So I did do a deeper video analysis of investing in gold and silver. If you're interested, I'll leave a link in the description. You can check that video out. However, I do have to put this out because with this rate cut, 0%, so you're getting nothing at the bank, people are starting to look at these safe haven assets. And let me show you exactly what's going on. So as I noticed, I looked into the websites that I usually look around to buy these things, and you could see there's an extreme volume of orders with these businesses and companies. You can see they're delayed for 10 plus days, minimum order of $300. Another website, again, delayed shipping of it, 5 to 10 plus business days. This you could see a note, this is goldsilver.com, that you need a minimum of $2,000 order, and it could take much longer to actually get it, possibly 4 weeks. So as all of this is happening, this is just an example showing you what people are thinking. They're starting to buy more gold and more silver from all these websites. And you could also see here, I noticed, is if you don't know much about gold and silver, I just want to give you an idea. You could see kind of the bottom right, it says as low as $67.99 per ounce over spot. What that is it's a premium. So, you know, there's the price per ounce, and then usually on coins, there's a premium on top of that. I noticed, for me personally, that I've been buying for maybe a few months now, several months or so, and when I first started buying, I saw the premium was originally $50. Just yesterday was $57, and right now, on March 16th, is $67. So premiums are increasing. You could also see this with silver. You could see the premium for that is almost $7. I don't personally remember the premium on silver coins. I do remember it was much less than that. Might have been like $2, $3, maybe $4 or $5, but now it's definitely increasing. So this is definitely something to consider. I did a video recently of what to do during a stock market crash, because we definitely seem to be in one because we're just dropping every single day. And people are thinking that this is buy the dip strategy. Not necessarily. This is kind of like a falling knife situation. So if you want to check that out, go right ahead. But if you guys have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. I wanted to get this out because this is going to become a much bigger question. What happens if interest rates go negative? And that's becoming much more likely at this point. So if this kind of helped you out, give me a thumbs up and subscribe to the channel for more videos. So thank you so much for watching, guys. Really appreciate it. And I'll see you in the next one.